Welcome back. In spirit of our spreadsheet videos, I hope you watched the income statement video. If you haven't, links up. We discussed 4 financial statements. What's the point of each? And also what is depreciation, what is cost of goods sold, some of those terms that you might have heard or you might have not had a hard time understanding, but also some of the financial terms like what is EBT, what is EBITDA, and what's the point of that? I thought that it would be a good idea for us to go to the source. You might have seen this in the last video that I took snippets of it. This is just a random company that I made. It's not a real company. These are all numbers are sample. Rich TikTok Guru Industries Inc. Pleasure. And here we have 2020 and 2021 income statements. We'll pretend that we're in 2022, all is said and done. So we're going to look at 2020 and 2021's financial statements for the full year. And as you can see, we didn't have time to go through some of the details on that, this is a financial statement. Again, income statements can look wildly different based on which vertical you're on, based on which specific customer base you focus on, your operations, what are you offering, or your product sales or services sales. So this is just for us. This is just a simple product company that we offer products to customers, and it goes through whatever we do from sourcing all the way to sales and operations. So here, as you can see in revenues, we have our gross sales, 3.9 million compared to the 3.1 million last year. Good job, everyone. TikTok Gurus Industries proud of you. We have 800,000 increase in our revenue, and it's good news, but it's without a context. Yeah, it's a great news that we increased our revenue. Good job, everyone. But what's the context? Is it all growth? Is it all profit? Well, let's take a look at that. Well, unfortunately, we had higher sales returns, effective products, people didn't need it. We have a really good return policy. So from 24,000, we went to 68,000 in returns. When you see that, it's a good idea to go back and probe and look at your return cases and see what's going on, why you have such a surge. This is more than tripled. And you want to make sure what's the cause of that, because this is a lot of money that you lost. So already our income statement is giving us some insight. Go back and look at your return logs, the return cases, and see what's going on. This is your net sales, or you can say total revenue, 3,832,000. We're still up from last year. Very good news. So from a growth standpoint, we're growing. We're selling more. Again, could it be that we're growing? Well, we need other data. We need our market share data. We need our internal data to look at that. It could also be just inflation. We increase our pricing. So again, these are all have context, but this is a good high level view of things for you to drill down and see why your financials is the way it is. Obviously, assume that this is a small business because we're focusing on your real estate holding or your small business. So it's much easier to drill down into your elements. But here, you have a really good growth in revenue. Again, you can go through the reason behind that using your internal data analytics. But for now, we'll take it. Cost of goods sold, we discussed it. So we have, in this case, raw material, direct labor. So raw material that we bought, we made it in-house, we have direct labor, and then we have overhead. So if we have light manufacturing in a way, in this fictional company, obviously I'm explaining it too much. So from the list that in the previous video I gave you, we have these 3 cost of goods sold, and as you can see, year to year they all increase as well. Inflation is upon us. By the way, CPI index at 8.6%. Are you kidding me? The report came in this Friday and I'm devastated. I think we all are. But anyway, I was just venting about it. But cost of everything went up, inflation. So yeah, our revenue went up, but our cost went up too. Now we can see the context behind it. Our gross profit. Look, we didn't have much of an increase in our gross profit. Why? Because yes, it's true that our net sales went up significantly year to year, but at the same time our gross profit went up slightly because our cost of goods sold went up according to that. It doesn't seem like we grew as much. It just seems like the prices are high. We did a good job of adjusting our prices based on inflation, but at the same time inflation caught up with us on cost of goods sold as well. So our gross profits increased very slightly, 65,000, still good. It means that we maintain everything. Again, it could be a good news, meaning that yes, inflation happens. That's something you can't control, unfortunately. You can't go to Federal Reserve and say, hey, please, for the love of God, stop printing money. We're dying here. But what you can do is increase your prices. You have to catch up with that inflation or to keep up with the inflation, which seems like our company, TikTok Gurus Industry, did a decent job at. Now we're in operating expenses. You've seen this in the previous video as well. Advertising, delivery, depreciation. We discussed depreciation, insurance, interest, mileage, and so on. And you can look at year to year and see how it went. This is not realistic that our rent stayed the same. I think that the commercial holding that owns the office that we're operating out of, our factory, is very benevolent, and they let us keep the same lease. Usually this doesn't happen in commercial triple net leases. there is in the lease, there is a year-to-year increase based on CPI index, which is used to be 3 and 4% when I was writing leases. Now with 8.6%, I don't even know. So let's move on. But it seems like you also had a significant increase in your operating expenses as well, which makes sense. Inflationary times, and also not just inflation. If your business is growing, you can also have increased expenses. So don't be alarmed. There's always a context to these things. You can have your expenses increase, but overall, if your company is growing, that's fine. In this case, it doesn't seem to be the case. It just seems to be that price of everything went up, price of your product went up too, and you're just keeping up. So you didn't have maybe a lot of growth. Again, your growth can be determined by things like your change in market share, size of the customers that you have. Did you increase your addressable market? Did you increase the number of customers you sell to? Did you increase your market geographically? Those are better data for you to understand what's happening with your business or if you're growing. You don't have any interest income, other incomes, but then you have net income. Obviously, you have EBT, earnings before taxes, as we discussed in the last video. So your earnings before taxes is 326,000 compared to last year, which was 805,000. So it seems like all your expenses are increasing at a faster pace than your revenue. Sad news, our TikTok industries is at danger because we're making less money, but we have to give some money to Uncle Sam. Our net income is 234,720 and it almost half of last year. That's not good news. Again, this is very real for a lot of small businesses because now some of those growth that are happening during COVID is slowing down. Hospitality is doing very well, which is something that I focus on a lot, but retail is not doing so well, and other verticals are suffering, or something might happen, especially with the way that the CPI index is increasing. The prices are going to go up. Sometimes they might suffer as well. Remember, your company can have a very good growth and can grow its revenue by 5%. But if you have prices of goods and services that you need for your business increasing by 8%, well, you're still behind, unfortunately. It's the same thing as if your salary goes up by 3%, but CPI index is at 8%. Well, you're getting a huge pay cut for that. You're not getting a raise. Same thing applies to here as well. If you are making money 3% or your revenue is 3% higher this year compared to last year, but your entire expenses are up 5%, 8%, 10%, well, you're still losing money. So this is what happened with our business as well. We lost money. Our net income lost money. Again, the story started very good. We're doing well. We're celebrating. Pats on the back. Good job, team. But as you can see, we went through the financial statements. We saw the context behind our costs and expenses. And we saw that, wow, this is tough. Last thing before we go is the earnings before interest, taxes, depreciation, and amortization. Those are good metrics as well. You can use them to see, wait a minute, what's happening? Is it that my taxes, depreciation, amortization, those are going up? Or is it just because that generally my business is not doing well? So those finance metrics are very good for you to run for your small business as well. So we can just look at your business viability as well. It's always a good idea to do that for your business too. And I think that always have that as a measure. Could be a spreadsheet, or could be you can just calculate it on your phone, but just know what your EBITDA is, even if you have a small business. But that's about it with income statement. Again, this video is just a more of a deep dive, continuing the video previously. Watch it here if you haven't. And let me know if you'd like me to do the same thing with the balance sheet. I'll do that as well. It's always good to have these dissections, going through the statements to just discuss what are the things that elements that you can extract data from. Always understand that accounting is mostly about analysis, reporting, but when it comes to financial analysis and financial insight, you want to go into these elements and do a deeper dive on them and triangulate them with other data to see how your business is doing. So always remember that. But let me know what financial statements you want me to discuss. If you want me to focus on a specific finance topic for small businesses or real estate, definitely I'll be more than happy to do that. Real estate right now for investment, I don't know, there's so much crappy content out there. There's so much garbage on TikTok and so on. So I'm not really motivated to talk about it. I'd rather talk about these kind of maybe not so exciting, more boring topics, but also I think they're very insightful. So let me know. And thank you so much for watching. If you want to know more about some of those measures in real estate like cap rate, watch a video here. I actually have a good video if you're interested in small business partnership up here. Watch it. It goes through some of the best practices for partnership, life lessons from some of the folks I work with. And let me know if there's any topic you want me to talk about. But until then, thank you for watching and keep learning. See you next time.